to Accelerate Your Wealth, a podcast by Rebecca Robertson, founder and director of Evolution Financial Planning. We hope you enjoy the show, and please feel free to leave us a review. It really does help. Feel free to connect with us on Facebook, LinkedIn and Instagram, or head over to www.rebeccarobertson.co.uk or our sponsor, Evolution Financial Planning, for regulated advice on www.evolutionfinancialplanning.co.uk/podcast.
Hey, it's Rebecca here, and I hope you're doing really well. So I was due to interview someone for a podcast, and unfortunately, I hope they're okay, but they didn't attend. So I'm now sitting here going, right, what should we talk about today? Because I have to get a podcast out every week. And I like interviewing people because, to be honest, it's easier than me sitting here talking to myself. This always feels a bit weirder. So I thought I would talk about what it's like working with a financial advisor. So for a lot of people, when they first come to me, they've either Googled female financial advisor, or they've known me on social media, read my book, or just been friends on Facebook or something, or been connected through LinkedIn or something of that nature. Excuse the noise if you can hear scratchy noises. That's my very old dog moving around in my office. And they often haven't worked with a financial advisor before, so it's quite new experience. And they are not, it's not necessarily they haven't got money, like they haven't got money to invest, but they may be sort of new to it. So they maybe inherited some money, or they've got some, new bonuses through work, or they've worked really hard in their business and they've had some great profits. Or like another client recently, they sold their business, and so they typically don't come from money. They haven't been surrounded by money, but they're that sort of middle bracket of earnings where they've got enough to pay the bills, they've enough food on the table, and maybe like an odd holiday once or twice a year potentially, up to clients who have quite lavish holidays, and go out and have takeaways every weekend and live quite comfortable lifestyles, maybe have 2 or 3 cars on the drive. But when they then inherit some money, or they come into some money, they start to realize that they can't keep spending the way that they're spending. They need to start thinking and planning for the future. Over a really bad cold, so hopefully you didn't hear my coughing then. I paused for a moment. So they only start thinking, people only start thinking about planning for the future when there's some sort of milestone that's happened, there's some sort of something that's come up through their family or a parent, and it's made them realize that they need to have a closer look at things. And then when we do that, like I spoke to a client today, which was quite a long call today, but was just really needed because there was just so much to discuss. And they had an old policy that they'd been paying, which they thought was his, and it wasn't. It was in her name. So that's a life insurance critical illness policy, which they thought was for him. So he was covered if something happened to him, as he was at that time running that business, was the main earner. But actually it wasn't, it was in her name. And also it was under a business policy, therefore that business doesn't exist anymore. So people tend to leave their finances, we just forget. No one's telling us to audit things. So when you then speak to a financial advisor, often it can be a bit of a can of worms. Sometimes there's more than 1 or 2 things to talk about. Not everyone, but sometimes there's lots of different layers. It might be other complexities around other family members, children, and also we look at old pensions, which it's sort of like really digging up the past for some people, and it takes a real effort. So it's not a simple process, because it's not like we can do everything for you. You have to give us authority to do certain things. So, for example, if we've got an old pension you want us to review, we do need you to sign a letter of authority, confirm where that pension is, how much the value is, so that we can then write to that pension provider and figure out exactly what's going on. Now, why can't we just take the information that you give us? We can't, we're not really allowed, because the information that they give you is, there's not enough of it for a start. So they don't often give certain information around charging structures. So clearly they should be, but they don't. They aren't often giving the fund code information. They just give sort of a real basic summary overview. So we have to ask many other questions. So that might be, the fund might have what's called a CEDAL code or an ISIN code, and they are the fund code. So every fund, every investment strategy has a fund, like a barcode that's attached to it. I hope my dogs aren't going to argue. I don't know if you heard that growl. My puppy is annoying my older dog. But she hasn't, and just walked over to him, but there we go. And we get grumpier as we get older, right? So we asking certain questions that the providers don't really generally give to clients or easily. So we write off the providers, and so that process in itself. So when we first speak to people, it's just just a discovery call to figure out what their circumstances are, what their situation is, and then we think about how we can help them. So whether it's a mortgage, or it's life insurance, or it's to review a pension, or it's an investment that they've got some money and it might end up going into a pension or an investment of some kind, or they've inherited some money, or their business is doing really well. We take those set of circumstances and sort of listen to the client to then find out exactly how we can help them. Now, we're quite holistic, so that might sound really obvious that we'll figure out how we can help them, but we're quite holistic. So we do a lot of things in several different ways. We're not square peg, square hole. We're much more, broader than that, because we give independent advice. So it might be that we offer a coaching session, or we'd offer a one-off piece of advice around a particular product, or we might offer financial planning, so forecasting a set of circumstances. So I was talking to a client today, they've got a lump sum of money, they want to know if they need to go back to work or not, and I showed them with forecasting how long that money will last based on their income, their expenditure. And there's other examples where we've done more complicated planning, where you've got clients who might be getting bonuses each year, they might be getting pay rises that are quite substantial, their business might be growing, and they want to sort of achieve certain objectives, kids going to university, retiring at a certain point, gifting money to children, and having a certain lifestyle between a certain age band to achieve certain objectives. So they want to plan for that future, so they want the money that they've got to work really well for them. So that's the planning piece. So we can put that into a forecasting system tool that I use, and that allows me to then sort out exactly what we can do for them. So that initial conversation is just, okay, yep, yes, we can help you. These are the kind of things how we can be able to help you. So that's with my client manager, Katie, at the moment does that. She's done that for me for about 6 or 7 years. So every time someone books in a discovery call, that's the first point of contact. You get an appointment booking link, and you get a reminder sent to you. And Katie at the moment physically calls people on the number that they provide. Then Katie will book the client in with the advisor. So that was me. I would have that booked into my diary. Again, the client will get an appointment reminder, and we don't, at that point, when we're not asking for them to do anything, we just need them to know roughly what their circumstances are. So some clients come really super prepared, they've got all the paperwork ready, and they feel really disappointed that we didn't go through everything, and then others don't know pension values and don't even know what they've got. Now that can be a little bit tricky, because then we can't drill down into the next steps. We can talk generically, but we're not able to move the conversation along. If we are, we can then start to discuss, okay, well, what's the right offer for you? Are we doing planning first and then advice around products, or are we doing a bit of both? Are we just doing a one-off piece of advice? We're not doing the planning, we're just maybe reviewing a pension. or are we just doing a one-off piece of like a coaching call or a mentoring call, for example? Excuse me. So our charging structure depends on what it is we're doing. Now, for most financial advisors, they don't. Some do the planning, some don't. If they do, some do it within the advice piece, and therefore it's sort of all included. Some financial advisors have a minimum level of investment or a minimum level of pension that they're reviewing, for example. Ours is usually about the 50 grand mark, because it's sort of any less than that, it does become a little bit tricky, because then our charges are very expensive for a very small pension amount. It would take maybe 3-4 years where you're potentially, in terms of making your money back. Not that that's the only reason why you're doing it, and I don't discourage people from getting advice for that reason. But the conversation might be, yes, we can help you, but this is our fee, and how comfortable are you paying that? We have to charge a fee as financial advisors because of the way that the regulation works. We also have to pay quite high, so we have to do a lot of CPD, continued professional development. We have to pay for licensing fees. We have to pay for liability insurance, systems and programs and software. And there's a huge amount of red tape around the regulation around how we help people. And obviously we need to be qualified and have a certain amount of experience. That's a given. I'm independent, but I always advocate to independent advisors, because we're not then tied to a particular company. And so the way that advisors charge does depend on who they work for, if they're self-employed, what kind of business model they run, if they're a sort of a sole trader set up on their own, or they have a large office, for example. So advisors charge very differently. It's a bit like having anything else. If you're having a carpet fitted or a kitchen fitted, or you're buying a new car, or it depends on how old the car is, what area you live in. It exactly the same with financial advisors. It's not a one, everyone will charge the same. For myself, I charge a fixed fee below 500,000. Over 500,000, it's a percentage of 1%. But we agree on an amount and fix it. And so therefore it is a fixed amount that I charge the client. The reason for that is because I like the client to know exactly it's not going to change. So they say, I've got an extra amount, 20 grand, 30 grand, whatever things can change sometimes. I'm doing more per month. I don't charge any extra for that. I like to keep things really simple and really upfront with clients. So when you're talking to a financial advisor, the charging structure is really important, and they should be super upfront about it. Now, there can be some bells and whistles added, but just be really clear on what value you need from those bells and whistles. Like an online portal, I wouldn't be paying an awful lot of money for something like that. Most advisors now have online portals, for example, or quarterly reports. A lot of the systems and programs can, you can get that kind of thing quite easily. So I wouldn't be paying an awful lot for things that might be added on, but I wouldn't necessarily say that's an awful lot of value. I think where we add quite a lot of value is like the conversation I had with a client this morning was 3 hours, and we talked about they've got money to invest, but some of it's not going to be invested straight away. So I've connected them with a platform where I'm not taking a charge or a fee or anything. I'm actually giving them the discount so that they get that deducted from their charges, because they're not giving me a fee, so that the money can't be held in the best savings cash rates until we make some investment decisions. We talk to them about their mortgage and overpaying on their mortgage, and we talk to them about their kids and their junior ISAs and etc. Like there's lots of sort of the whole conversation. It's very holistic. It's not just, I've got this pension with Scottish Widows, what should I do with it? That's included, but it's not just that. So once we've had the second conversation and we've figured out exactly what offering is right for the client, excuse me, we've told the client what our fees are. If they want to take a breather and have a little think about it, we would normally send them our services brochure just so they can see the charges and the structure in a document. And then we would follow up with them in a couple of weeks just to see if they've got any questions. If they're ready to go ahead there and then we would start the process, and we would invite them to, we've got an encrypted client portal, which is where they upload their client information. So we can't just, stick it on the back of a post-it note or just have a conversation. So quite willy-nilly, we need to have a very much in-depth conversation. And there's a lot to discuss. And the simplest and easiest way for the client and the quickest way for the client to give us that information is for them to put it into a system. That system is really user-friendly. It's encrypted, so it's super, super safe. And it means that then when I come to speak to them next, I've got all the information in front of me without having to ask, what's your national insurance number, or what's your date of birth, and how long have you lived there? It's more in-depth conversations about what do you want for your future? What do you want for your children's future? Had another pause there for a second. To clear my, when you've had a cold, it's just, so stuffy. So we would send them an online portal. They would complete the information as best as they can. And we would also upload a letter of authority. So this is a one-page document. It's not like laboriously long. It's not a big, long form. It's just a letter that they sign at the bottom to give us authority to collect information only. We're not doing anything else. We're just collecting information from their provider. So they would need to sign one of those per policy. We would then send that to the provider. We sometimes ask them for a statement. For example, companies like Scottish Provident, Aviva, they have a multitude of different departments in different locations all over the country. So sometimes if we've got a statement, it'll tell us what office it's under, so we can ring a direct phone number. It might not be quite the right department, but it should be roughly the right location. And we would then send the letter of authority to the provider, check that they've received it, and within a certain time frame, that provider would send the information back. Now, without dissing certain companies, there are certain companies that take a long time to respond. Others are really quick and very good. So the main sort of mainstream providers are very good. There are some financial advisor kind of set up firms, which I won't name, but one of them begins with an S. It uses an initial quite a lot. There's a J in there, and it might end in a P. They're not very good at getting back information. Now, and I don't really blame some of these providers because, we're potentially taking away that client. Not always, because I'm a independent advisor, and the way that I work is a very impartial way. So let's just say you've got an existing financial advisor, which doesn't happen very often, but let's say you did, or you had a situation where you've got an existing investment that's been set up years ago. I'd review it, and if it's best to stay where it is, I'd say stay where it is, because I'm not getting paid on implementation of that advice. So some advisors work in this way where they do the advice, they go for the advice report, and then you say, yes, I'll go ahead, please, and then they're paid. Now, to me, that's a little bit of a backward way of doing things, because I'm then sort of saying to you, well, could I be saying to you, go ahead with this, because then I get paid? But what if actually it's best to stay where you are? How are you going to pay me then? I've just done all the work, same amount of work. In some respects, sometimes it's more. Because I'm looking at the underlying investment strategies. So I've got one with a client recently. They're with Aviva. I set up a pension for them over a year ago with Aviva. But this scheme that they currently got with Aviva, another old scheme I didn't review at the time, has 200 fund choices. So now I need to go through those 200 funds and figure out which one's best for them. And that particular one, they can't move it. So it's not always giving impartial, independent advice. I charge on advice because that's the professional element that I do. I'm not giving it whether you go ahead with it or not. I'm doing it based on the time I've spent giving you that advice. So I charge on the report. But whilst we're collecting the information and we're getting the information from the providers, there isn't a charge for that. And those two initial conversations, there's no charge. Once we've had the information back from the providers, or close to most of it, we will book in a third, this time not a phone call, an actual Zoom meeting. So I don't, as a company, as a general rule, we do go and meet some clients in their houses, but it's very few and far between. We generally do everything on Teams or on Zoom. And clients love that. And that's because a lot of our clients are tech savvy. They're typically no older than maybe 60, 65. They're not sort of terribly elderly. Therefore, they're more than capable of concentrating and dealing with being online. They're much more used to it. So, which is great for us because we can help more people. And I hate trying to find addresses, driving around. I've done that. Been there, done that, in the dark, signing a torch, trying to figure out if I'm on the right drive or not. It's not fun, especially in the winter, in the pouring rain. So we do what's called an investment strategy call. So we would have already sent the client an attitude to risk profile, which is asking them questions about the kind of risk that they want to take with the money, which I'm not getting into today. We're not going to get into that sort of can of worms. I'm going to stick with the process and what it's like working with a financial advisor. And we would then have a Zoom call around that investment strategy. We go delve more deeply into what we found so far, discuss any plans, any aspirations, and if they were doing projections and we're doing financial planning, the full forecasting piece, then we'd go into a lot more detail about future planning. We would maybe talk about mortgages. We might talk about what they're currently paying. We would talk about current tax efficiencies. We would talk about, their income and expenditure. A whole conversation depending on who they are and what they're about. So it can cover financial planning, insurances, debt management, retirement. It could cover a multitude of things. Excuse me. Once we've then said, okay, we know exactly what we're doing now, I know how much I'm playing with, we'd 100% confirm the client a fee, and after the call we would send them what's called a client agreement on that online portal that I mentioned. So they agreed to that fee, and at that point I'm sort of go away and finish off my research. So I start researching the existing funds. I start researching based on the strategy that they want to apply, what the new funds might look like, what tax wrappers that might be, the tax advantages that might apply, and put together a financial report for that client based on that recommendation. We would email it to that client along with our invoice, and we would arrange a call to go through that report with the client. Once we've gone through the report, and we might, we could be discussing a multitude of things. The client, 9 times out of 10, I don't think I've really ever had a client not want the advice and not go ahead. We would start that implementation, and we would they'd say, okay, that's great. We would then send them on the system. We would send them a suitability report, that same report on the system, and they would tick happy to proceed. They've obviously read through the documentation. And this is just an overview of, by the way, of the process. There's regulatory things that have to be done within this process. Excuse me. And then we would so I'm not saying and ah quite a lot. I've just, this head cold really just froze your brain a little bit. So we would send them on that system. They would say okay, and then we would start the implementation process where let's just say we're setting up some new accounts. We would go and do those, and they would never send the money to us, so they'd never send us any funds. It would be sent to Quilter, AJ Bell, Standard Life, Aviva, whichever platform or provider we have recommended. The money would be sent to there, and it's set up in there. We set up the account in their name with that provider, with the underlying investment strategy that we've discussed. Once that process is complete, then that's all good. And they might be a client who is a one-off piece of advice, so we would do that for them, and then it would finish, and then they'd go on their merry way. Or they might be an ongoing client. So I look after about 80 to 85, I think maybe now, ongoing clients. And so we charge a percentage. Then a client doesn't have to write a check. We're paid via the provider as their ongoing advisor. So if there's anything that they need, they basically come to us first. So they don't have to then speak to lots of different providers or different platforms or try and figure out how to use systems or processes. They can just come to us straight away, and we do it for them. Once a year, we have to do a regulatory process. So we have to look after those clients in a certain way. So we would do a review of the portfolio, make sure it's in line with what we've just previously discussed, and change the circumstances if anything else has changed for them, reevaluate their attitude to risk, and just, make sure it's doing what it should be doing in a nutshell, really. Discuss any other concerns or issues that the client might have, any changes in circumstances, etc. This year I've had to do a lot of work on existing plans and diversify quite a lot, whereas in some previous years, it's quite a straightforward process. This year I definitely had more of my money's worth this year, and I've made some few changes to some portfolios just because of the way the markets have been, and I believe in diversifying as much as possible. But that should set up the clients for a real good future. And there's no charge for that, because I'm that's part of the advice process as an ongoing client. Of course, if the client's got any other problems, concerns, or need any other help, then we're happy to discuss. Depending on what sort of level of client they are in terms of the serviceability, depends on how much we do for them. So, for example, if they've got a very small pension amount, maybe less than sort of 100,000, but they wanted to do some financial planning work, then we would charge a separate fee. But if they're a sort of a higher got more funds under management client, we would have probably already done that as part of the process and part of the original package, because that's often, with more money becomes more problems. So therefore you have to do a lot more planning for that. So that is our process. So I hope that gives you a feel of what it's like to work with a financial advisor. All financial advisors will issue documentation. All financial advisors will collect your information. All financial advisors should give you, not necessarily independent, they might be tied, but they should give you, good advice in terms of what your circumstances and requirements are. But they all work in a different way in regards to whether they're online or face-to-face, what their minimum fees are, what the type of clients that they're good at. So I don't specialise in clients what I would call end of life, where we're sort of care home planning, that kind of thing. I wouldn't say that's my specialty. I'm better at wealth creation around like the 45 to 55, 60-year-old who is accumulating wealth rather than right at the end of the span. And there are you need certain financial exams to be able to do care planning. Similar, you need certain qualifications to do pensions, which are defined benefits. So there's a guaranteed element, and they're tricky these days to review in itself. The charges are quite expensive. Also, if you're doing lifetime mortgages, so mortgages for elderly, there's a particular exam you need for that. Which again, I don't do that. Someone in my team does do that. So not all financial advisors will do everything. We're pretty generalists. Rather than niche. Now, but what we aren't is we're not accountants. So we're not going to tell you what to put on your tax return. We can talk to you about tax saving strategies. We can talk to you about, tax planning for businesses in terms of pension contributions, but we're not accountants. Equally, we're not tax advisors. So a tax advisor will be talking to you about capital gains tax, for example. Although we take qualifications and we know that kind of thing, not everybody has the jurisdiction under the company to work out those kind of calculations. A lot of financial advisors could refer you to an accountant to do that for you instead. Because it's not always, it's quite a specialist area, some of those tax calculations. What we should be more talking to you about is not just the products of moving product A from product B, it's also about the planning, the actual what you want your retirement to look like and how you can be maximizing your position. I feel like I've talked enough today about that particular subject. I'm sure if you have any questions, I'd love to hear from you. Do email me at rebecca@rebeccarobertson.co.uk. you're welcome to email me any questions, and I'll maybe do a whole podcast on it, or I might just quickly email you back. I'd love you to subscribe. If you don't already subscribe, please do. And obviously, please leave a testimonial if you enjoy our shows. I'd love to get some more testimonials on our podcast. So it's over and out from me today. Thank you for joining me, and I hope you found that helpful. Take care.
Thank you for joining us on today's episode of Accelerate Your Wealth. For further help or to connect with Rebecca directly, please head over to the website www.rebeccarobertson.co.uk, where you can find further information on our planner, book, and how to further maximise your wealth. Our sponsor, Evolution Financial Planning, for regulated advice on pensions, investments, mortgages, insurances on www.evolutionfinancialplanning.co.uk/podcast.